Hello, dear traders. Alexander Gerchik with you, and Gerchik and Company. And today we have a market analysis as usual. Every 2 weeks we're doing that. Obviously, as you take a look right now in the market, there's nothing is going on. Basically, the market is very slow. The moves are not that big, but still we will do right now all market analysis. I have all the results. So right now we're going to go pair by pair, and we're going to analyze. I have numbers for the US dollar against euro. Our previous one was a 1070, the levels. And as you can see right now, the level is just a little lower, a little higher. It's 111.30. That's where it came from. So the lower side of the level is 11.30. The level right now is 112.85. That's what it is. So we have a channel and only work from this channel, from a low and a high range of that side. That's what it has to do with the euro dollar. The next one is a British pound. It's 132.78, 133.75. Actually, this numbers worked out very well. As you can see, 132.78, that was the high previous one. And this is the high of this bar. So that's what it is. Yeah, just make it, hold on, a little bit bigger for you to see it. I want to show you so you'll understand where it came from. You see, it was very strong level, and it did work out, 132.78. Right now, we have a lower side of the level right here, 129.55, and a higher side still 133.52. That's what the high side of the level. So right now, the British pound as well is in a very tight range from 133 to 129.50. That's what it has to do with the euro dollar. The next one is the Japanese yen. Japanese yen, 103.99. Was a high side. Right now, as you can see, the Japanese yen becomes a very range instrument, 102.74 to the lower side of 107.70. So this is the low side of the range, and this is the high side of the range. And if the Japanese yen will not get out from it, it's going to stay in a very tight range. But once we're going to break down to the low side, 167, to go very big to the downside for the Japanese yen. The next one is the Canadian dollar. The Canadian dollar is 128.62, 131.41. As you can see, the high side of the Canadian dollar is still 132.55. It was trying to break a few days ago. It couldn't break it. But once it's going to break 132.55, the Canadian dollar is going to get weaker against the US dollar. As you can see, a lot of currencies right now extremely weak. They're weak or US dollar strong does not make a difference, but it makes a difference that US dollar right now is much stronger than any other currency. So as you can see, the high side of the Canadian dollar is 132.45, and low side of the Canadian dollar is 128.12. That's what the Canadian dollar. New Zealand dollar, 0.7298, 0.7379. As you can see, the New Zealand dollar basically stay at the same level, 0.72135. That's a low side right here, and a high side of the Canadian dollar is 0.7373. So that's what it is. It looks like the, I'm sorry, not Canadian, New Zealand. It looks like New Zealand dollar is making an accumulation to the upside. If basically this figure continued to build, we can basically have a very big break to the upside for the New Zealand dollar. Australian dollar, right now we have a low side of the level, as you can see, 0.74414. That's a low side, you see. We touch it many times. And a high side is right here, 0.76497. As you can see, pretty much every instrument is right now in a very tight range. The moves are not that big, waiting for them to get out. And as long as and as much as they're going to be in a tight range, the faster they're going to get out. Gold. Basically, everybody is waiting for right now what's going to be with gold. If the market is going to collapse, the gold is expecting to go higher, much higher. So the low side of the level is 1303. As you can see, it's a very strong level. If the level is going to be broken, the gold is going to go much lower. And upside, you see it's still the same, 1354. The range pretty big. You can really make a lot of money in this range from the high or low side of the range. So 1303 to 1354. That's what it is. And last one is you see the oil tried to break the low side. They had a false breakout, 43, and a high side is a $48. So the oil is in a very also tight range. Right now, everybody is waiting what's going to be with the oil, gold, and everything else. That's why all of this instrument is trading in a tight range. Dear traders, what I want to tell you why basically today our webinar has been a short. For one simple reason, as you can see, nothing is going on. Once nothing is going on, you shouldn't go into the market, because once you don't understand what's going on, it's better not to trade. So it's been Alexander Gerchik with the Gerchik Company, and it's our bi-weekly talk about the stock market, and then talk about the Forex, and talk about everything else, whatever can make money for you. Thank you very much. If you have any questions how to open account, get in our English website, gerchikandcompany.com, open account, trade with us, make money with us. It's been Alexander Gerchik, and thank you very much.